All right, let's get right into it. This week, it feels like all of Wall Street is collectively holding its breath, and it's all because of one single company's earnings report. We're talking, of course, about Nvidia, the absolute titan of the AI chip world. But this story isn't just about their numbers.
It's really about this question right here. Why on earth is one company's report being called a risk event for the entire market? I mean, think about that. How can one company wield so much power that its quarterly results could send ripples through practically everyone's portfolio? Well, that's exactly what we're going to break down.
You see, the story really starts here. The incredible gains we've seen in the stock market lately, it hasn't been a case of a rising tide lifting all boats. Not at all. Instead, this entire rally has been propped up and powered by a very, very small group of superstar tech companies.
And this week, the biggest superstar of them all is stepping right into the spotlight. All eyes, and I mean all eyes, are on Nvidia.
So that brings us to our first section. The market itself is on edge. Let's really dig into why everything feels so fragile right now.
The main characters in this drama are a group you've probably heard of called the Magnificent Seven. And no, this isn't a Western. It's a handful of huge, mega-cap tech stocks, think Apple, Microsoft, and yes, Nvidia, that have been responsible for a wildly disproportionate amount of the market's growth.
And this creates this massive vulnerability, a thing called concentration risk. Basically, when so much of the market's value is tied up in so few stocks, a stumble from just one of them can feel like an earthquake. It can drag down the whole S&P 500, even if most other companies are actually doing just fine.
So, we've set the stage. The market's nervous. But how does this all zero in specifically on Nvidia? Well, in Section 2, we're going to see why this one company has become the absolute linchpin for the market's entire mood.
For starters, just look at this number. The financial expectations are, well, they're staggering. Analysts are forecasting revenue numbers that would be a mind-blowing jump from last year. That puts an incredible amount of pressure on the company to deliver something truly astronomical. And it's not just a few optimists. There is an overwhelming consensus on Wall Street. I mean, look at this. Out of 13 key analysts covering the stock, 12 have a buy rating. Only a single one is on the fence with a hold. That's Wall Street betting almost unanimously on a huge success, which leaves basically zero room for error.
Analysts at Morgan Stanley really summed it up perfectly. They said, expectations have risen, and we think rightfully so. This isn't just hope. It's a deep conviction that has already been priced into the stock and really the entire market.
But it's definitely not all smooth sailing. There's a major geopolitical drama playing out in the background that could throw a huge wrench in the works, and that is the China complication.
At the very heart of this drama is one specific product, the H2 chip. Now, Nvidia designed this chip specifically for the Chinese market. It was their clever way of trying to navigate tough U.S. export controls and stay in one of the biggest tech markets in the world.
But here's the twist. Reports started to surface that Nvidia had actually told its suppliers to halt production of the H20. So why would they do that? Well, some sources suggest that Beijing was quietly urging Chinese companies to avoid it, all as part of a bigger strategy to boost their own homegrown chip industry. And remember, this is a big deal. Nvidia that already warned investors that these restrictions could cost them as much as $8 billion. And the ripple effect was immediate and crystal clear. As soon as that news broke, Nvidia's stock dipped, and so did the stock of its key supplier, TSMC. But on the other side of the world, it was a different story. Chinese chip makers like SMIC and Cambricon saw their stocks soar. You can literally see the economic battle lines being drawn in real time.
You know, this whole conflict really shines a spotlight on a much wider issue, something you might call a tale of two economies. Because if you look past the AI hype, the rest of the market is sending very different and much more complicated signals.
The AI sector might be absolutely booming, but if you look just under the surface, at sectors like retail and even other parts of the software industry, the story is far from simple. It's a real mixed bag, and it tells you a lot about what's actually going on with the economy. So let's take retail, for instance. On one hand, you have discount chains like Ross stores. Their stock is up because they're betting that as inflation pinches, more and more shoppers are going to come looking for bargains. But on the other hand, you got warehouse clubs like BJ's Wholesale, whose stock fell after sales were disappointing. This points to a consumer who's getting really price sensitive, maybe even a little nervous.
And you see this exact same kind of split happening in software. Zoom's stock is climbing, and it's thanks to a strong forecast that's being driven by new AI tools that customers actually want and are excited about. But then you have a company like Workday. Their shares fell after they missed their profit targets, even though they're also investing heavily in AI. It's a perfect reminder that just slapping an AI label on your strategy isn't a magic bullet for success.
Okay, so let's tie all these threads together. What does this all mean? It means Nvidia has been positioned as the ultimate AI bellwether. And that brings us to our final and most crucial takeaway.
Here's the bottom line. Nvidia's report isn't just about one company's profit and loss. It's really a test, a massive stress test for the entire investment thesis that has been fueling the stock market rally. It's become a referendum on whether the AI revolution is real and durable enough to keep powering everything forward. And you gotta remember, Nvidia's report isn't happening in a vacuum. It's landing right in the middle of a really critical week for the economy. On Monday, we get new home sales data. Wednesday is the main event with Nvidia. And then Friday brings these huge updates on economic growth and inflation. It's a week that's just packed with clues about where the economy is heading.
So we're all left with this one massive question. Is the AI boom a powerful enough engine to pull the entire market along with it? Or are the cracks we're seeing in retail and other sectors a serious warning sign that the foundation is weaker than it looks? The answer to that question could very well be written this Wednesday when Nvidia tells us their story.